morning and welcome to episode 3 of the Morning Spotlight podcast. I'm your host, Mike Ham, coming to you as always from the Spotlight Studios in Morristown, New Jersey. We're talking real estate again. It's Tuesday. That's what we do. We got a great panel. We're talking about the industrial market in New Jersey specifically. Let's meet this panel. So first panelist has worked in both the business and legal fields, concentrating on leasing, acquisition, sales, and mortgage financing in the commercial and industrial real estate sectors. He's a COO and general counsel at the Stroh Companies in Ridgewood, New Jersey. Mitch Kay. Mitch, welcome.
Thank you for having me. Always great to see you and speak with you.
You too. And then a second panelist has been involved in some of New Jersey's most high-profile corporate attraction and retention projects. He's a partner and leader of the Economic Incentive Advisory Practice and Land Use, Zoning, and Redevelopment Practice at Murphy, Schiller, and Wilkes in Newark, New Jersey. Chris Murphy. Chris, how you doing today?
Good, Mike. Always good to see you.
You too, man. And our final panelist has represented a broad spectrum of clients from publicly traded REITs to new private investors. She's the first vice president of investment sales at Marcus & Millichap, Carly Iacono. Carly, how you doing?
Amazing. Great to see you again. Thanks.
Awesome. Absolutely. Thank you for coming on. So let's just start it out here. So Carly, we're going to start with you. So industrial still seems to be the one asset class that is still trending positively, while some of the other commercial asset classes are lagging behind. So take us through what you're seeing from your perspective.
Absolutely, Michael. So we're seeing tremendous demand, both from private clients and from REITs who are looking to diversify out of historically straight retail portfolios. So we're seeing, of course, our standard industrial buyers are very active and looking for opportunities. We're seeing the REITs that were just retail look for diversification. And then we're also seeing a new push from the private client, high net worth individual side. As industrial becomes a little more in the forefront and we get some more investment grade tenants, I think that the focus as a stable play is going to really amp up and continue. We're having people come to us who are new to real estate, and instead of saying, we want retail or something that usually was a sort of stepping point into commercial real estate, they're starting with industrial, but they're looking for specific lease structures, specific tenants that are still kind of comfortable. But we have a whole new wave of buyer interest because of the long-term stability of the asset class.
Great. So Mitch, from your perspective, being someone, working for Stroh, and you guys are obviously buying a lot of industrial space, take us through what you see from that standpoint.
Sure. So it's an incredibly competitive market, and Carly can certainly attest to that. And we are seeing more and more demand for industrial space, for warehousing space. You're seeing prices that, quite frankly, would be unfathomable 2 years ago, 3 years ago, and definitely going back 10 years ago, where you're kind of now looking to other types of properties that may be rezoned, repurposed, knocked down, and built new, just because of the location, specifically in northern New Jersey. 20 million people are within an hour and a half drive, and that's a huge driver for a lot of logistics companies and food companies, especially in light of COVID.
Great. So Chris, now that we'll round out the panel and then we'll get everybody talking. So obviously you're doing a lot of economic incentive work, trying to bring businesses here to New Jersey. So take us through the current state of the New Jersey's, business development incentive programs, and how impactful can those be right now?
Sure. So interesting. First of all, just from a volume standpoint, we've, in the last couple of months, industrial from a law firm perspective has been incredibly hot, right? So we're seeing deals continue to move forward where where we haven't seen a retail lease at our firm probably in, the last 3 months. A lot of industrial deals coming in, both on the land use side and the transactional side. And we're also seeing, I think, to touch on what Mitch said, municipalities are a little more open and seemingly open to looking at areas that might not have been zoned for industrial use, whether it's a change in the zoning ordinance or the adoption of a redevelopment plan, more open to industrial in their municipalities, which has been great. So on the incentive side, just to go back a little bit, New Jersey's economic incentive programs, the main program, Grow New Jersey and ERG, Grow New Jersey being the state's main job attraction and retention program, and ERG being the state's sole developer program, actually expired in July of 2019. Pre-COVID, the governor's office and the legislature were working on a new round of incentives. COVID hit and everything went on hold. So New Jersey currently does not have a business attraction or retention incentive program, which really has been, I think, will be impactful going forward. The industrial market in New Jersey is very hot, but there's only so much property, so much land to develop in New Jersey outside of repurposing existing spaces or rezoning complete areas to, allow industrial. So as New Jersey competes with the Lehigh Valley, Pennsylvania for some of these industrial end users, the use of incentives, I think, will become more important for the industrial market. On the office side, and I know we're not talking about that today, we're going to need something very quickly because we just won't be able to maintain talent here and attract new talent without it.
Right. So I'm just going to kind of offer this one up to the group. So on the first week, we had an episode about the residential market and how the current residential market is really weird because there's very low supply, there's extremely high demand, and the low supply is causing a lot of people to act almost irrationally, moving out of New York City, moving into northern New Jersey, stuff like that. So from an industrial standpoint, are you guys seeing the same type of thing? Are people so bullish on the industrial market that they're taking more risks than maybe they wouldn't have before this?
I mean, I certainly, before COVID, I think people have been taking on more risks, or at least from a private equity standpoint, they probably are penciling things out to see that they work for a 5-year plan and looking to dispose of the asset. But it is so competitive. And the thing that's different from, let's say, the Lehigh Valley and Western Pennsylvania, whatnot, is that we have so many people, and we will always most likely be that last mile or middle mile market where JLL, I think, just recently came out with a very bullish prediction of 1 billion square feet of industrial warehousing space by 2025. I think that's nationwide. But I do think when you have such a close concentration of people, and in light of COVID, people are now ordering their food online at a much higher rate. People are ordering a lot more products that otherwise weren't ordering anything. And that's going to need to be facilitated by smaller warehouses, middle-sized warehouses, and not necessarily a 700,000 or 1 million square foot facility that has a ton of racking. It's more getting it from that location, maybe in the Midwest, into these smaller locations in New Jersey to facilitate to everyone within the New York City area.
Right. Anybody else got anything to add on that?
Yeah, Carly, I can let you go after, but I just, I think that, the industrial market has always been incredibly hot, or has been at least recently incredibly hot, way before COVID, right? So,
right.
The residential market right now is, quite frankly, insane. I mean, you're looking at, I live in Westfield, you look at, Scotch Plains, Summit, Chatham, we were on the market for, a house currently. I told my realtor, I said, don't even talk to me for a year. Like, let's see how this works out. Now, if you bring me something very interesting in New York City, I'd be willing to look at it now, because I think that as everyone's fleeing, I was just looking at an apartment in the Village 3 years ago, was on the market for 1.7 million, is now on the market for 750,000. I mean, listen, New York City is going to come back. It might take some time, but if you're an investor and have some money, it's a place I'd think about putting it. Not really on topic with the industrial market, but it kind of goes to, Mitch is completely on point there. I mean, the Lehigh Valley can't compete with us as it relates to talent. We have way more talent here as far as workforce is concerned for these industrial warehouses, and just work so close to everything. When you talk about last mile, Lehigh Valley's not last mile. North Jersey is last mile. So That's how I feel.
Yeah, I would agree with all of that. I think it really comes down to supply and demand. And that's one thing that our investors are looking at, is the opportunity for tenants to move within a specific market, or sort of the stickiness of their existing spaces. And if there's limited ability to redevelop or to move a facility, then that property is probably going to trade in a absurdly low cap rate because of the long-term security. So across the board, we're seeing this huge flight to security in all asset classes, as people have just kind of been rattled by the pending recession and now COVID, and there's just a lot of instability in the world in every sector. So that flight to quality is really kind of pushing pricing extra aggressive. in areas where it seems that the assets cannot easily be replaced, which of course, Northern New Jersey is a prime example of that.
Right. Now, are you guys seeing a difference in the amount of, purchase transactions as opposed to lease signings? Is there a difference there? Is there a disproportionate number that you guys are seeing?
So we have a very specific criteria in terms of what we acquire. We see a ton of different options, but unless we're going to get in on the right basis, it's not going to pencil out from what we do. We have seen a lot of tenancy transactions. In fact, during COVID, a period where when the lockdown was implemented, we were very much expecting to have almost little to no traction in leasing. There was constant buzz of people trying to get into our few vacant spaces, and it continues to this day. So it is uber competitive. But then the other challenge is, of course, kind of educating prospective tenants that are new to the area in terms of what the actual market prices are, which can always be a challenge.
Right. So let's kind of go off of that a little bit. So what are some of the big challenges facing landlords right now?
Okay, I'll take this one.
All right, yeah, go for it.
That's the landlord.
Yeah, right.
I mean, certainly a huge challenge during COVID has been tenants who were hit so hard that they cannot pay rent. And from a landlord's perspective, you have to put on both perhaps your human hat and your business hat at the same time. You have to kind of vet everyone and figure out, is someone crying wolf? Can this person actually pay? Are they doing fine? Are they an essential business? And what is sort of the future outlook? So it is truly a taxing and difficult machination to figure out, is this even the right tenant long-term? Are they viable post-COVID? How do we put pieces together to make sure that this tenant is comfortable in the interim while they, gather pieces and try to rebuild after lockdown ends or businesses are reopened?
Right. How about from a tenant perspective? If Chris or Carly, if either of you can talk about that.
We don't actually do any leasing.
Okay.
Not the best person to speak about backselling, but one thing we're watching from a kind of retail crossover that ties in is the potential backfill of retail anchor big box spaces with industrial, and how, and maybe Chris can touch on the viability of that from a zoning and legal standpoint, but how that would affect rents overall. If, industrial can now become one with retail, is that going to push down retail rents, or going to change industrial rents? And how do we kind of change the way we think about industrial if it's now in some of our more prime locations and not in these massive industrial parks like it used to be? So
right.
Sort of a shift as we try to figure out what to do with some of these, let's call them B and C class malls, or even large anchors in these strip centers, things like that.
Yeah, I think I'm sorry. Go ahead, Mitch, please.
I was going to say, I'm really glad that you brought that up, because I was going to bring up at some point, Chris, is there anything that the state is looking to do, or that you think might be worthwhile, that can minimize the difficulty to rezone? There are just so many municipalities in this state, and it does create a roadblock for potential buyers where you have a willing buyer and a willing seller. And it's just like, I'm not going to buy this property unless we know we're going to get this zone to be industrial. How can, especially in light of No Grow New Jersey, how can the state kind of enhance trading and enhance business where you can get more of a bricks and clicks, brick and mortar retail store and warehousing in the back for one company, but it meets that industrial zoning?
Yeah, so I don't think the word New Jersey zoning and quick or expedient ever were put together. I think, listen, it's, there needs to be smart, effective policy, right? And, that takes leadership. And I think that, there are folks in Trenton who understand these issues, and there are a lot of folks in the private sector, myself included, that take part in lobbying efforts to, help change policy. I think that in this case, because, we're going to see so much of, what Carly was just talking about, some, issues related to retail and how do we repurpose certain buildings. I think it's going to, the market is going to demand change, policy change. So I think that you will see that. I can't sit here and say, things are going to be really quick, or, I see that coming in the next 5 months. But I think that the state has already started pre-COVID to look at some of these assets, these malls, these big box stores maybe that aren't doing so well, and how they can be used, for a new use. And one of those things was recently amending the local housing and redevelopment law to include a certain criteria for these vacant, larger spaces, essentially malls, that can be then, used as a criteria for qualifying as a designation under the state's redevelopment law. So, the people are thinking about this, and it's, but the market's going to force, these changes. I think you can't have a vacant, big box retail store in your municipality forever. People are going to want to see that be developed. And where I think municipalities always some municipalities didn't always want industrial, right? Because it's not sexy and it's not, right out front, and it creates, in some cases, some traffic issues. I think in light of the fact that a lot of municipalities throughout the state of New Jersey are going to be really hurting for revenue, you're going to see a willingness to work with developers and people wanting to bring a new revenue stream into your municipality. We've seen that even with pilots, where some municipalities were always saying, we're not going that route. We're not going to be giving away, or entering into pilots with developers, are now coming to us and saying, hey, we've kind of learned a little bit more about this, and we're interested in working with you on a pilot for this project. I'm working on 2 projects now where the municipalities, 2 separate municipalities, have never done a pilot before, and they are very willing and wanting, because they want that revenue.
Right.
So did I answer a question there, or did I just talk?
I think you answered Mitch's question.
I think I answered my own question. I posed the question to myself and then answered it.
I think that's how you make yourself look as smart as possible, personally.
You got to a point where I was like, is he just talking right now? What's happening?
I was too. I didn't know. I blacked out. I didn't know if I was just talking.
You're like Will Ferrell, a la old school.
Right. Exactly.
Right. Well, we'll make sure we'll keep all that in, just because, it sounded great. Maybe we could look a little bit about, so it's the second episode that we did for the Morning Spotlight was
that you done did, or that
we done did.
Okay.
We done did it, and it was week 2. So was more focused on real estate finance, right? So with all the forbearance and all that kind of stuff, do we see any type of flooding of the market, maybe of smaller landlords that have, smaller industrial space? Do we see any changes in the market coming up over the next year, maybe 2 years, as a result of some of the economic issues that some of these, landlords are facing right now?
I think you kind of are trying to understand what is going to be the end result of perhaps landlords or owners of buildings if they can't live up to their mortgage obligations.
Yeah, especially, if you take a smaller landlord that maybe has a tenant that has been struggling to pay rent over the last few months, they don't have any cash flow coming in. Then what happens once they're going to have to start paying back that mortgage whenever that date is?
Sure. I mean, I think you'll see more specifically, I think if there's an owner occupier, a landlord who owns the building and in turn also uses it for their business, if that business was severely impacted by COVID for whatever reason, despite it being industrial, that's where I think you're going to see a lot of opportunity to purchase buildings, even at a more preferable price. I think most landlords that own a decent sized portfolio are pretty sophisticated, but sure, there's going to be landlords that cannot keep up with their debt service obligations and don't have any sort of income coming in, and maybe their lender's not willing to provide any sort of relief or modification in the interim. I think you'll see more items penciling out or falling out in the fall and maybe into the first quarter of 2021, especially if there's a second wave of COVID, because then we're in a whole new ballgame of PPP again. I don't know. Who knows?
Yeah, absolutely.
I would agree with what Mitch said. I think there's a huge bifurcation in types of tenants, types of landlords. I mean, just saying industrial is pretty broad, really. I think anyone who's focused or has tenants focused on e-commerce distribution or has a larger portfolio, they are rolling and loving life right now. We have a lot of smaller private clients who have local tenants who are struggling and asking for rent relief. We just actually transitioned a client out of a multi-tenant industrial building into investment grade retail net lease because his income was so unstable in the industrial property, and it was really way more than he could manage long term. So it's going to be a big spread. There's going to be, smaller landlords who do struggle, and I think we'll see some of those assets come to market. The valuations will be really interesting if the tenants aren't paying or we're not sure if they're going to pay. So how those are priced is going to be kind of fun end of the year and beginning of next year, I think, as the price discovery happens. But then on the flip side, anything with credit, anything e-commerce related, anything, really distribution or last mile, I think we're just going to continue to see that cap rate compression and demand. And I don't think any of those are going to face forbearance.
Right. All right. So we're going to move into our closing segment called Under the Spotlight. We'll put each of you under the spotlight and you give us one bold prediction for the future of the industrial market. Chris, we haven't heard from you a little bit, so we're going to start with you.
Wait, do you have special music though that kind of you're going to plug
we're
in?
Gonna, we're going to add that in. It's got to build some.
No, just to be serious for a minute, my biggest prediction, the biggest prediction for 2020 or 2021?
Well, just moving forward.
Moving forward.
Yeah, so, from now, because
so not the biggest prediction from 2019.
Right. Yeah. In the future.
We're not predicting anything.
We're predicting.
My prediction is that Michael Hamm is going to be the biggest thing in real estate radio ever existed.
Ever. Yeah.
And I don't think I can't make a bold prediction about what am I going to say? Oh, the industrial real estate market's going to stay hot.
Right.
Nostradamus here. No, I have nothing to add.
All right, great. I appreciate that. All right, Mitch, under the spotlight. What do you got?
Ooh. You're going to definitely have to do some editing at this point of the show because I really,
no edits.
Phrasing it again as this bold prediction, and we really touched upon a lot of the obvious notions of the fact that this market is going to continue to stay hot, and unless something derails it, But I am really struggling for a super bold prediction in this instance. I guess.
How about a less than bold prediction? Give us a wishy-washy prediction.
So first, confirmed, you're going to edit sort of this little trouble section while I contemplate.
I'm going to see how I feel with it once I listen back through.
Can I pass to Carly first?
Yeah, pass to Carly. Now you're going to put Carly right under the spot. So Carly's under the
and
spotlight.
And we might have
now.
to go around. We're sort of playing poker. And
we're circling something. I feel like it,
So I got your back, Mitch. I'll jump.
All right.
Nice. Thank you.
Here we go.
I think it's going to be primarily related to lease structures and the resale value of investment properties. And what I mean by that, we're going to see more of a commoditization of net lease. It's going to become industrial net lease is going to become a more established part of the market because the resale value is going to be so profitable. So anything that's single tenant is going to become more mainstream as an investment vehicle, and that's going to prompt developers to look at their lease structures and make them more commercial, more in line with retail leases to attract more buyers and get the highest premium. So I think it's going to be just a difference in the way the assets are priced, and that's going to go all the way back to the way the leases are structured. We're going to see longer term leases. We're going to see less management on the landlord, triple net instead of double net. Historically, industrial is roof structure and some other things on the landlord. I think we're going to see more of a demand for a clean net lease structure, and that's going to result in really high valuations in resale pricing.
So move away from triple net is what you're saying.
No, to triple net.
So triple net.
It's net lease now, but a lot of industrial is multi-tenant or double net where there's roof and structure on the landlord, or the lease terms are shorter, except for maybe FedEx or some of our really big mainstream tenants. But I think as that trickles down and companies are doing sale leasebacks and we're having more demand for industrial just as an asset class overall, we're going to see less management on the landlord. Because what we see right now is a lot of, it's really not true triple net, it's double net, where there's roof structure, parking lot, a host of other things. So I think we'll see more longer term leases that are true triple net, more demand for single tenant instead of multi-tenant. and just it'll become a mainstream investment vehicle.
And in that instance, you're kind of saying landlord or their management company would be hands off. You're just saying, it's all you, deal with it.
On the tenant, because that's what the demand is from the private client space. And as more investors get involved, and it's high net worth individuals or less sophisticated, they don't want the management, but they're going to pay the premium, right? So if someone's doing a build to suit, what do they care about? Resale value. So who's going to pay the most? People are going to pay the most are the ones who, are coming from other industries normally and just looking for passive income, and they believe in the concept of industrial, but they don't have any aptitude or desire to manage it. Okay. I think you see that developers kind of change their build-to-suit structure to meet the private client demand, which is going to be increasing, which is not good for you. Sorry.
Do you want to give a bold prediction back to that?
Mitch is gonna. I don't have.
I was gonna pivot. I mean, I think it's all going to depend on the ownership structure, and if it is true private, if it's private equity or REIT or whatnot, it's going to be placed differently. If it's hands off, it's going to be placed differently. If in fact a portion of the ownership is involved in it or is the expert in the industry, that's going to maintain that management component of owning and operating industrial buildings. But we'll see. That's your bold prediction. I was just going to kind of pivot and say that I guess my bold prediction would be that I do think in the next couple of years, you will truly see the Route 17s and the Route 10s and the other Route 22s, they will shift from, what you're seeing now is just strict retail to a lot more of the retail industrial and possibly a combination of both in one house. And I just think we're overall going to be shifting our ways of doing shopping and socializing. And part of that is moving away from hopping onto a major highway and picking up food or clothing,
right.
And seeing more vans. I don't know if you'll need as many tractor trailers, but a lot of that last mile type of activity.
Absolutely. That's awesome. No, that was a good one. I think that's definitely bold because I drive on Route 10 and it's all retail basically right now. So,
all
right. So,
van, right?
Right. And I drive a van, the whole thing. So,
there you go.
So that wraps up our show. I want to thank our panelists, Chris Murphy, Mitch Kay, Carly Iacono. Couldn't have done this without you. For everybody listening, if you want to listen to a panel discuss a certain topic, go to themorningspotlight.com or email us at themorningspotlight@gmail.com and leave us something to do. Give us something to do. Give us something to talk about. Make sure to subscribe, leave some stars for us. Would really appreciate that. Guys, thank you so much. And everybody else, thanks for listening. And we'll see you next time.